All right, let's just check in with the markets now. Well, the local market rallied today. The all-share was up 2%. Miners and resources stocks, they led the way as the commodity prices recovered to quite a huge extent, by the way. Joseph Busha from Busha Investment Group joins me now. Joseph, thanks indeed for talking to us. I mean, it was a great day on the local market. You'll tell us why in a moment. But it really doesn't make up for the bloodbath we've seen in the last few sessions, has it?
Well, it doesn't really make up, it's a slow process. You are aware that the all-share was touching about 80,000 index points just in March and April. But all of a sudden, because of the war in Ukraine and other many factors affecting our local market, the JSE has taken a beating. You're talking about the inflation in the US, the Chinese zero infection on COVID. We have looked at the war in Ukraine, food prices, and so on. So those things have been weighed on the market. But certainly, I think today is a good day. It's on the mend, led by Naspers, up 7%, and Kumba. So this is really just a little bit of a catch-up. But the volatility and negativity, I think, is still there. Just all depends on how long the war in Ukraine and certainty in certain policies that will come through, in particular from China.
And what do you make of this? ArcelorMittal, I mean, it's the last thing that steel producer needed. Numsa embarking on a wage strike. I mean, what do you make of it? ArcelorMittal's share price for a long time now has not been what it was made out to be those years when everyone was excited about the share.
Well, it peaked at about 260 rand per share in 2008, 6 June 2008. Currently, we're sitting just about 8 rand per share. So that's a massive drop from, the good years way down the years. But certainly, I think it's not good. We're entering into the strike season in SA running up to August and the anniversary of the Marikana massacre. So we also have noticed, there's still the strike at Sibanye. So this is not really good. The workers, as you said earlier on, were demanding 15%. They came with 5%. The union rejected it and go on strike today. But I think ArcelorMittal have increased that to about 7%, which the unions, I think, are still rejecting, given the conditions they are citing in SA that would be very difficult and unsustainable to increase it by 10%.
I'm not quite sure whether you've been following the mining indaba in Cape Town. Well attended after 2 years due to COVID. It's a chance for the mining industry, Joseph, to collectively tell government about its grievances. I mean, this is over and above just showcasing investments. What did you make of it? President Cyril Ramaphosa coming up in the week saying that, look, we will take care of mining license backlogs, water licenses. But really, the mining industry, this country can do so much more. The infrastructure and the red tape really bringing it down.
He had to say the right things. And I think this is really on the back of him not being able to speak on Workers' Day in Rustenburg next to Marikana there. So he struck all the right chords, what the business wants to hear. And I certainly think that he is committed. Remember, he promised to bring, I think, 100 billion in investments in SA. So the bottlenecks there is an administrative issue, which is the licensing, and you talked about the infrastructure, water. I think we've had issues with some of the mines with water. Electricity has been a problem. Now, the mines are going into the energy sector to try and help into that. And they hope, obviously, the easing of issuing of licenses will enable them to be able to start mining and also to invest more in that. The industry is expected to have invested about 40 billion rands in the event that governments really come to the party in terms of making it easier for them to obtain the mining license, but also to just provide a stable infrastructure, in particular the energy. So I think he said the right things, but also he talked about ESG issues, looking after the workers in terms of accommodation and their living wage. So he had to really balance between the demands of the workers, given the strike at Sibanye, and certainly also making sure that the mines are profitable and sustainable.
All right, we'll leave it there. Thanks very much indeed. Joseph Busha from Busha Investment Group. All right.